Good morning, everyone. Welcome to our Tuesday morning trading session. I hope everyone had a nice holiday weekend. I know I did. I did very little the last 3 days, which was a refreshing break. All right, but now we're back at it. Today is a Tuesday session, so we're going to take a few minutes early on here, and we're going to take a look at the Raptor. Next on our Raptor agenda, we're going to be looking at Raptor Tweaks. Now, for the vast majority of the markets you're going to be looking at trading, the default settings are just fine. But I know there's some of you out there who like to adjust the settings a little bit. You like to play with them. And the Raptor, of course, allows you to do that. The regular DTS tools, they're all pretty much locked. There's not much that you can change on there other than the brick size. You can adjust the brick size. But the Raptor does allow a few more tweakability options. Now, let me show you what your Raptor chart is looking like when you think you may need to tweak it a little bit. The E-mini S&P is kind of at the head of the tweaking list. It's one of the world's most popular markets. It's a great market. I think it's a lot of traders love it or hate it. I don't think there's any middle ground as far as the S&P goes. But notice these vertical white lines. These are your daybreak lines. And you can see how close these lines fall together with the standard settings. Now, this is still fine if you're prepared to trade, say, end of day. If you're going to hold a position for several days, you can see the signals are still quite valid. We got a cloud crossover signal back here a few days ago. The market puts in a nice little rally. We get a reversal signal. The market falls down a little bit, and we get a hard edge bounce, and then the market rallies up again. So, you know, the signals still work, but if you're going to be day trading this, you're obviously not going to have very many opportunities. So when your daybreak lines fall too close together, or conversely, if they're too far apart, if you look down at your time scale and your time scale starts breaking up bars every 10 seconds or 30 seconds or whatever, so that the bars are printing so quickly that you don't even have a chance to make a decision on a trade, that is your cue that you may need to do a couple of Raptor tweaks. Now, I've gone over this several times already over the course of the last few weeks, so these settings aren't going to be that new to anyone, but there is the off chance that someone is in the room this morning who hasn't seen them, so we will review them. But we're going to go to our alternate settings. So the default settings are at an 8-tick brick. And let me just pull this over here, and I'm going to bring over my other chart with the default settings, and you're going to see what this is like. And you can see how the daybreak lines start to expand a little bit. Ideally, we want the chart to span the width of your monitor, at least. That kind of gives us a decent enough size chart that we should see at least a few trading opportunities within the day. If you're ever in doubt as to what your chart should look like, if you put your default settings on, say, a chart like the NASDAQ or the Dow or the Russell or gold or crude or practically any other market besides the E-mini S&P, you'll get a pretty good idea of what size your chart should be like and how your signal should be unfolding. So when you do your tweak, you're going to want to follow a few signals, and you're going to want to make sure that the signals are clear, that they're printing, and ideally that there's some follow through off these signals. You can see that here we had a couple signals with very little follow through. And then you need to ask yourself, well, why is that? Was it because the market is counter trend? Was it because the market is sideways? And just scrolling back here a little bit, I'd have to say it was because the market is in a little bit of a sideways range, that some of those signals did not have much follow through to them. We'll discuss sideways ranges in a little more detail later. But right now, I just want to show you how you can expand your chart to allow you to get a few more signals. So you can go from this chart where everything is so close together to this chart where you actually get at least a few more signals to trade. All right, so we're going to go to our indicator window because the Raptor is an indicator, and we're going to find the Raptor 2.0. Most of the Raptor settings you're going to leave at default. If you want to change your cloud colors or your brick colors, this is where you go to do that. And this is also where you're going to make your tweak. So the alternate settings are 4, 4, and 6. A 4-tick hawk, a 4-tick falcon, and a 6-tick eagle. So our cloud sizes, we're going to change the cloud sizes from 8 and 12 to 6 and 4. And then your hawk brick size, we're also going to change to 4. And then once you get that done, you need to go to your data series because that's going to control the chart size, and we're going to change that to a 4-tick brick. Actually change this to 24.5. All right. So once you make those changes, you're going to end up expanding your chart. The smaller you make your values on your brick size and on your bar size here for the hawk, the faster or the more prolific your signals will become. You're going to get more signals. Your Raptor filter also should be changed. I don't know why I left that at a 12-tick brick, but you should dial that down to a 6-tick. And then voila, you have an expanded chart. Now, if your chart was moving along too quickly, if you were printing far too many signals, and let me just, the markets have been so quiet lately, I'm not going to find something here that's ultra volatile. Well, let's try crude oil. Crude oil would normally be the one that we would do this to. So you're going to check your time down here, and you can see that the bars are printing at a reasonable pace. You don't want them to be printing so quickly that you don't have a chance to make a decision. I'm not going to be able to find you an example. It's not usually a problem. Oh, did you see how the market just kind of printed a couple bars there? A tip-off is usually when you start seeing your seconds print. You know, when the bars start printing by the second, then that may be an indication that your brick size and your settings are too small, and you need to make them larger. So if you're working on the default settings, we're not here, we're actually working on the alternate settings. But if you were working on the default settings, you would look to expand your settings. You would probably go from, here, let me get this out of here so we don't confuse you. We would go from the default brick sizes, say from an 8 tick, we would dial it up to a 10. I usually do things in increments of 2. And then I'll print the chart, I'll review the signals, I'll see how the signals are performing, I'll see how many bars I'm getting, and then I'll go into the indicator itself. And again, I'll make changes there, usually in increments of 2. So I'll go down to my brick size, and I may change this to well, definitely change it to a 10, and maybe a 14, or a 16, or a 15. And then the brick size I would also move up to an 8, or maybe a 10, and then see how the chart looks, and then look at the signals. Look at the signal, see if there's follow-through. You know, look at the signal. This is a hard edge, or pardon me, a soft edge sell. We know it goes to the hard edge. Okay, it looks like it performed all right. Here are cloud crossovers. Here's a soft edge buy, and just review your signals. Then, of course, if you're ever in doubt, you can always write us or write me about the market that you're interested in, and I would be happy to let you know my thoughts on it. But like I said, we've already reviewed a lot of these things over the last few weeks. Bear with me here for a second. All right, so there's just a very quick overview of the Raptor tweaks. There shouldn't be a lot of tweaking involved in your Raptor. Like I said, a lot of the settings have already been refined from a lot of experimentation, a lot of use. Does anybody have any questions about that? If so, please don't be shy. And then also, we've pretty much gone through all the Raptor things already, all the Raptor syllabus. We're a little bit ahead of schedule. I honestly thought that there would be a few more questions, a little more cloudy gray areas, but maybe not. Maybe I'm just a fantastic teacher, or you guys are terrific students. But if you do have any questions, I certainly hope that you'll ask. Ooh, yes, Elmer, thank you for reminding me. Elmer is asking, when do you switch to a new futures contract? That's actually not off track, Elmer. I think I need to roll ahead in crude oil, actually. What you want to do is you want to look at the expiration calendars. And for that, you have several choices. You can just do a search for expiration calendars. Let me see if Adam has one on the website. I know he's got an economic calendar. The economic calendars are usually pretty good as well. And hold on a second here. So if you go to the Indicator Warehouse website, and at the very bottom, he's got this hidden really well. I don't know why he puts it so small, but there you go. There's an economic calendar, and it will tell you of markets that are ending today. You can also check a site like Forex Factory. They're pretty good. It will tell you important reports that are pending. They'll tell you when contracts are expiring. And then, of course, you can always go to the source. And they have calendars. You can search So they've got the economic calendars, the gold calendar, say you're interested in gold or crude or whatever the case is, you can pull up that calendar, the contract you're interested in, and check your contract specs. And down here somewhere is expiration. There we go, termination of trading. It's always a little bit convoluted. I'll give you guys you can search expiration calendar as well. I don't know if this one will give us what we want. This one might be a little bit more user-friendly. Aha! And then I'll give you my cheat. I'll copy this and send it to everybody. A little plug for Apex Futures. They've got a pretty decent expiration calendar. So crude oil, the March contract, it's expiring today, so we'll be looking at rolling into the April contract for the next month. The stock indices usually expire, so we're in the March contract, so those are going to be expiring mid-March. So the indices down here. Crude oil is the one that always sneaks up on me. So thank you, Elmer, for that, for reminding me I should be in the April contract. Now I'll show you, for those of you who don't know, here's a simple way to roll into the next contract month. So you go to your control center, you pull down to your instrument manager, you find the market in question, in this case crude oil. If you click on it and you right-click this button here, it will normally prompt you with the current contract month, in which case all you do is left-click this button up here, and you see it will insert crude oil April. And you can do this for any contract you're interested in. If you're wondering, should I be trading March feeder cattle? So you click on feeder cattle, click over, and it says, no, you should be trading April. All right. What about, what other one here? How about lumber, March lumber. Should I be trading lumber? It says, nope, you should be trading May lumber. All right, let's put May lumber in there. What about live cattle? April live cattle. And it comes back, yep, that's the current month for that. What about natural gas? No, we should be into April natural gas. The NASDAQ. What about silver? Yep, silver is still the right month. And so on. So you can just go through your markets that way and make sure that you are in the current month for all the markets you are interested in. Once you've done that, do yourself a favor and save your workspace. This is going to save all your changes so that you don't lose them and end up trading the March crude oil contract by mistake when you come back tomorrow. Good question here from Jeff. Jeff asked, does it make sense to roll when the volume in the new contract exceeds the volume in the current contract? That's kind of the rule of thumb, Jeff. Normally, I'll roll that last week of expiration. There's still usually plenty of liquidity. All the volume, once the new contract starts to exceed the old contract in volume, that's because everybody is leaving what they call the front month, which is the one that's about to expire, and moving out into the next contract. But yes, that's a good rule of thumb. And you can build a market analyzer here with your Ninja. So you can go here to new, you can go market analyzer, and from here you're going to get a window like this. And then if you want, you can compare different contract months. I've already deleted mine, but let's say I still had both crude oils on here. I could put up the March and the April crude oil, and then I can go to the columns, and I would delete these things, and I would put in not the average volume, but the daily volume. And then I could compare the volume of the March crude oil to the April crude oil. Again, there's a lot of information available online. You could go to a website like Bar Chart, and they will have all this information available to you at a glance. So let's say we're looking at, what were we just looking at? Crude oil. So here's crude oil. And here you get all the crude oil contracts at a glance. So you see, well, March has expired as of today. But here's the April contract, May, June, July. You can see crude oil, there is a ton of liquidity. You could be trading June next year and still not have too much difficulty getting in and out of your positions. Let's take a look at, what was the one that feeder cattle I think we were looking at. Suggested I roll. There you go. All right, so feeder cattle, the March contract has 1,000 contracts trading. The April contract, 463. I think the reason, I don't know why Ninja prompted me to roll into April. When does feeder expire? I know we're getting a little bit sidetracked here. Feeder cattle, March contract, March 30th. Oh, I see. So we've got another week on the March contract. So we're going to see traders start to move over. Open interest is high. Open interest is important as well. This shows you how many contracts are actually changing hands during the day, and this shows you how many contracts did not settle up or are not settled. Feeder cattle a little bit on the thin side anyway. But again, you can do this for any market you're interested in, and you'll get to know the markets that you like to follow. So a market, say like gold, is another huge market where you're not really going to have difficulty regardless of what contract month you choose. So you see the April contract just huge. So long as you stay with the standard months, April, June, October, you can already be looking at the June contract. December's still a little light, but you know what? Another month or two, December will balloon, and it will exceed the volume even in the June or October contracts. But even here, you can see the open interest, very, very decent. A lot of contracts being traded. And that's all free as well. So there's a great website to go to also if you just want to get like a real quick overview of what's going on. And I have a feeling, Tony, you are shut out of the room again. Maybe. All right, folks, so, oh no, okay, good. I'm glad that you were able to post. All right, folks, so now the ball is kind of in your court. I've gone over pretty much all the Raptor things that I was wanting to show you. So from here on out, you need to ask questions. So if there's a burning question that comes to you, certainly let me know. Otherwise, jot it down and save it for the next day. And I will do my best to answer it for you. Okay, in the meantime, let's see what we got going on here today. A little bit of a rally out of the gate. Yesterday, the markets were closed, of course. You may see, if you're running a 24/7 chart, you may see some electronic trading. I think my crude oil chart showed that. 1 second. This one might, yeah, see, this one's on 24/7. So yesterday's session, this was just the Globex. You can see you didn't miss anything. I'm going to change my data series to 24/5. And that's probably going to eliminate those few hours of trading yesterday. No, still there. Doesn't matter. All right. A little bit of a soft start, actually, to the day. Well, soft start, a little bit of a rally. The market's still looking crazy bullish. I'm sure just when everybody thought we were going to see the NASDAQ and the stock indices take a little bit of a tumble, and they start to get some traction again. don't usually like to rush in, especially after a 3-day break. But it looks like some of those early signals did get some follow through. Here's our first eagle signal. Not quite to the profit objective, but certainly high enough that you can get the trade to break even, or perhaps even just take that profit. It looks like we might be entering a little bit of a pullback phase. We do have a first micro-macro cross signal here. That has triggered, but we are retracing a little bit. The nice thing about this is we could look to re-enter on the next leg up, maybe place our entry above there. Just for now, if it develops into a macro pullback, then we can adjust that. Clayton asks, when will this be posted? I have to review it 20 times before I actually learn it. I think, Clayton, the guy who's doing the posting for us is pretty efficient. He'll probably have it up later today. If not today, certainly tomorrow. No, Clayton, it's not Ben. Adam's actually enlisted the services of a online, I'm trying to find his name, an online assistant. Nasir is his name. But he's been very efficient about getting those things posted early. Tony asks, Raptor question, where is the recording of the explanation of the 3 signals? Those would be in the members area, and there should be a little bit of a blurb underneath the video saying this one is reviewing signal 1, signal 2, signal 3. While we're waiting though, we can go over them again. So allow me to roll back here a little bit. Okay, this one's almost textbook right here. We'll start with signal 1. The signal 1 is our cloud crossover signal. Like the Eagle signal, the Falcon trend change signal, and the first micro-macro cross signal in the Hawk, the number 1 signal tends to develop at the beginning of a trend. So it's going to develop either out of a sideways mess or off of a reversal. In this case, you can see it kind of developed off of a little bit of a sideways mess. The market going sideways, producing all kinds of signals, no follow through. And then we come back with a number 1 signal. So what makes for a good number 1 signal? Well, the Raptor will print the number 1 signal when your clouds cross over. Now this one, it looks like it actually printed a little bit early, which is fine. But a lot of times your Raptor will wait for the clouds to fully cross over. So there must have been a period here where the cloud bands were actually fully engaged enough for the Raptor to print the signal, because otherwise it would print the signal right here. Now, both these signals can be seen as a number one signal. What happens with the number one signal is the clouds start to cross over and then they start stacking in the opposite direction. So here we go from a bearish band to a bullish band. The cloud crossover is normally preceded by a little bit of a retrace and a bounce. What that shows you is that there's a fresh commitment to the new trend direction. And you can see whether you interpreted this as your cloud crossover or this as your cloud crossover. In both cases, we had that little bit of a retrace into the cloud and the bounce out. This is important. You need to be on the lookout for that because in my way of thinking, this bounce is pretty important. If you don't get the bounce, you don't have as strong a number one signal. So here we had a number one signal with a very, very minor bounce just as the clouds were starting to cross. Right, clouds just starting to cross. There's a little itty bitty bounce. We get the number one signal. There was follow through to it, but it wasn't perhaps as reliable as this number one right here or this number one right here, which actually started to get, oh, they waffled a little bit more, but they started to get some traction. All right, so that's your number one signal, your cloud crossover. It occurs when your clouds change direction, they're fully stacked in the other direction, and we tend to see a little bit of a retest, kind of the last-ditch effort to resume the previous trend before the market bounces out and confirms the signal going the new direction. The second signal is our counter-trend signal, the number two signal. And there's a couple parameters we need to have for that as well. Namely, before you can have a counter-trend signal, you need to have a trend, or at least something resembling a trend. Now try not to micromanage this. If it looks like it's a trend, if it looks like it starts in the bottom left of your chart and goes to the top right, you have a trend. The second component that you need for your number two signal is you need a test of the extreme. You need a retest and a failure and some sort of indication that the market is losing its grip on the trend. That will produce a number two signal. Your first target for the number two signal is the hard edge of the trading band. Therefore, your more reliable number two signals are going to occur when the band is really wide. You're going to get a much more overbought, or if the band is really wide to the bottom side, oversold market condition. So you can see this was a number two signal. It was valid, came down, hit the hard edge, and then started to bounce again. Now, if you were holding on for more of a move on this one, and let's say your initial stop was up here, which is the nice thing about a counter-trend signal, is that you always know where to place your stop, right? Your stop always goes above that recent swing high or swing low, as the case may be. This would probably be a good time to start to roll your stops in. So the market did not resume the downtrend, reverse took you out, but you were able to reduce your initial risk by approximately half. The third signal is your number three signal. It is a continuation signal. It's going to, again, because it's a continuation signal, you need something resembling a trend. It's going to occur when the market encounters the hard edge. Those are the two components of the number 3 signal. You need to have a trend to continue, and you need to be bouncing off of the hard edge. That's your number 3 signal. Then we have the mysterious number 4 signal, which is a double pullback signal. It's kind of like two number 3 signals in a row. And sometimes I should point out the number 3 signal, it will occur off of either hard edge. But again, you want to be thinking about what you see, because the computer, of course, is only going to print a signal when all the conditions are perfect, right? So here, this number 3 signal was perfect. We encountered the hard edge, we bounced, we printed a signal. This is actually a number 3 signal as well, even though we're perhaps a couple of ticks shy. So you want to be on the lookout for that. But I'm going to use these two signals here just to illustrate the double pullback, which is the mysterious number 4 signal. So once again, it's a continuation signal. You need to see something resembling a trend. And what will happen is the market will pull back twice. Each time it will produce a signal coming out. It's normally that second signal that we are most interested in. So those can be a couple number 3 signals. That can just be a couple of bounces off of the hard edge, however you see it. But here too, it is a continuation signal. So again, you need a trend, and you need to see the retests in that trend. Notice these number 3 signals that we're printing and these number 2 signals, why are these not valid? Well, because there's no trend. It's a number 3 signal. It's supposed to be a continuation signal. There is no trend to continue here. This is a number 2 signal. It's supposed to be a counter trend signal. There's no trend to go counter to. All right, so before you get too excited about just buying and selling the signals blindly, ask yourself, what is my trend? Do I have a trend? Remember, the number 3 is a continuation signal. The number 2 is a reversal signal. If there's no signal to continue or no signal to reverse, then maybe you should consider that the market is in a sideways range. Let me see if I can find you a half decent double pullback. Well, this one's no, it's not quite right. I would have liked to have seen this leg here. We're going to pretend for a moment. So we have a trend. Let's pretend for a moment that this retraced a little bit deeper, came out, produced a signal, retraced one more time, came out, produced a signal. That would be an ideal number 4 or a double pullback. Now the Raptor doesn't print those, but it's still something that you want to be aware of. Yeah, Clayton, no, it doesn't really print a number 4. We struggled with that for a while, but it was just too difficult to get the programming to recognize the 2 signals. Actually, where I'm looking here is not too bad. So we have something resembling a little bit of a trend. The market comes down, produces a number 3 signal. Market retreats into the band again, comes out with another number 3 signal. This is pretty much as close to the number 4, the double pullback, as you're going to find. And again, don't get too worried about, oh, is that a number 4? Is that a number 3? just bear in mind what it is you're looking for here. We're seeing a market that's trying to head lower, and it's rejected not only once, but rejecting lower prices twice. Traders have a tendency to do things in pairs. I don't know why, it just seems to work that way. That the buyers will allow the sellers to move against them a couple of times before they say, okay, enough of that. And then they start to rally. And likewise, the sellers will do it to the buyers. You know, it's almost like when you have kids. You'll put up with their nonsense a couple of times, and then you've had enough, and you say, okay, knock it off. Right? When they're fighting with their brothers or sisters. You'll let them squabble and, you know, just kind of ignore it for a little while, and then the noise will get a little louder, you'll ignore it a little more, and then finally somebody will start crying or shouting, and then it's like, okay, that's enough. It's almost as though the market does the same thing. You know, the buyers will allow the sellers to move against them once, and they'll humor them, and then they'll try it again. It's like, okay, enough of that nonsense, and then they'll finally put in the rally. So that's kind of what the number 4 scenario shows you. Sometimes the buyers will only allow them one move against, hence the hard edge bounce. And that tends to develop a lot of times when the trend is really strong. All right, Clayton's asking, how do I set my trade manager just to trade a certain number of contracts? Here on the risk percent, click on that. It's actually a button, and you'll move to manual mode, and then you can default to whatever quantity you put right there. And then regardless of how you set up your trade, you will always trade just one contract. Clayton says, but I want to use the risk component at the same time. Well, it's a little bit of a balancing act. You can't really do both. I suppose the other thing you could do is you could just dial down your risk amount, say to 1%. And then you may end up, you know, setting up some trades that you're not able to take. But if you're looking to run tighter stops, it will only give you a single. The easiest way to do it, Clayton, though, is just go to manual mode, and in the back of your mind, know what an acceptable risk amount is. So, for instance, if you're trading a $10,000 account, let's say, and you don't want to risk more than 2% on a trade, well, that means you're going to be hovering somewhere around $200 in risk. So if I set up a trade like this, where I have $400 in risk, then I know I've kind of blown the budget. But if I set up a trade like this, where I'm running 265 in risk, well, you know, quick math tells me that's 2.65%, 2.5%. That may not be a deal breaker, right? I may still be able to make that one fly while not risking an inordinate amount of my trading capital. So that's the simplest way to do it. Yeah, Clayton says, I'll figure it out. You need to play with it a little bit, really, is what it amounts to. And everybody's needs are going to be different because everybody's going to be trading a different amount of capital. did I forget to submit my order? Oh, and we had a macro pullback here as well. Doggone it. Sleep at the switch, Eric. All right, so we had the first micro-macro cross develop into a very nice macro pullback, which I would have been keen on adjusting my entry. All right, well, just kind of on hold here for the moment. Looks like our eagle trade, first eagle trade, followed through, hit our profit objective. Hooray for us. Yeah, it's a good idea, Tony. Tony says, it's just my opinion, but if you're going to use a trade manager, let it do its thing. You'll find it's the best tool ever. The whole point of the exercise, folks, is not to risk more than you can afford. If you're not comfortable with this amount right here, that's okay. Dial it down. Dial down your risk amount maybe to 1.5% or 1%. You need an amount here that's going to keep you calm. I found that my worst trading decisions have always been made from a position of fear. And believe me, nobody likes to lose money. If somebody tells you they like to lose money, then you go ahead, you tell them, okay, give me $100 or give me $1,000. Nobody likes to lose money. But it is part of trading. You, as a trader, are a risk taker. That is your job definition. And not only is it your job description, but it's also a requirement. So Ed Sequoia, I've mentioned this before, but Ed Sequoia, a very famous trader, he had a famous quote, something to the effect of, the only way not to lose money trading is to stop trading, or something like that. Or if you don't want to lose money, don't trade. He put it a little more eloquently. Well, we got a basic little trend line touch going here on the Falcon. I'm looking for a reason to get into this market again. I'd love to see another little bit of a retrace. I don't know if we're going to get it. I'm really disappointed I missed that macro pullback, but oh well, whatever. Certainly won't be the last signal I miss. Elmer's asking, Eric, can you remind me the support and resistance works with any kind of chart, not just Renko's? Yes, any kind of chart. It is an intraday tool, however. It will not work end of day. So you can plot it on a time chart or tick chart, whatever you like. Won't work on point and figure charts for, well, actually, I wonder if it would. You got me thinking now here. Let's see. While we're waiting, we'll play a little bit here. So we'll build a NASDAQ chart. And we'll do a little point and figure. We'll go with the defaults. It's going to be a little bit fast, but whatever. So for those of you who haven't seen a point and figure chart before, there you go. And I'm curious, where'd they go? I got so many indicators in here. Ah, there they are. I'm going to need more data. Yeah, just thought of that. Ah, look at that. They do plot. I wasn't sure they would plot on a point and figure chart. But yeah, just about any chart style you would like. So let's say we wanted to do a, I don't know, 5-minute chart. Oops. Just make sure you have enough data. I think 10 days is the minimum that it looks back. There you go. And I may as well take this to the extreme. Let's see what we can do with some of these fancy Japanese charts. Where's the Kagi? Let's do a Kagi chart. Oh, look at that. Even plot on a Kagi chart. The universal trading tool. All right, we're getting a little top heavy now. It looks like we might get that retrace after all. What time is it? It's 7:30, so we're about an hour into the session. It's normally when we would see a little bit of a retrace, a little bit of a dip. Not quite a macro pullback yet here in the hawk, but we're getting close. Well, really quiet, almost disturbingly so. I'd love to see a retrace here to the hard edge. Even the first one, somewhere around 53.39.5, that would put us right in line with our support and resistance sweep, right there, with the median line. Got a nice little hard edge bounce. That would be something to try to take advantage of. Might be on hold here for a little while, though, as traders try to sort themselves out. We've been taking a long time building this bar here, and that's just on the hawk. You can see the Raptor and the Eagle, the Falcon, all getting some pretty fat bars near the top of this recent leg up. Yeah, Tony says there's no real news holding the market back, but what's the expression? You need to feed a bull market every day. All these great trading expressions. Well, yeah, I almost think we're going to see a little bit of a slide here. I don't think we're going to get a number 2 signal, but we may get a slow drift back to the hard edge, or one of the hard edges. And the market is bullish this morning. I don't think there's too much question about that. Oop, I almost saw a macro pullback. There we go. We're getting a little bit of a macro pullback type flavor to this bar. It's waffling. You see it goes a tick lower. We get the macro pullback. It goes a tick higher. It turns green again. So it looks as though this bar, if it finishes on the low, we will complete a macro pullback signal. Or not. They're not going to give me that chance, are they? Well, we sure spend a lot of time waiting. Crude oil price is falling off some. Well, there's not much to do. Just have to wait for them. Well, we're getting a little bit of an uptick, but we never got the macro pullback signal there. Chris. Oh, there we go. It's a shame we didn't get that macro pullback signal. We were waiting for that, but didn't. Didn't get the signal just right. Well, we had the right idea. Well, looks like the move today came early on. We might be shut out here for a little while. Well, that was a quick move, but a short-lived one. maybe we're going to get another macro pullback. Oh dear. Well, there's nothing you can do. You just gotta wait for it. All right, we're getting warmer. Still no macro pullback. All right, well, here we go. We got a macro pullback. Or the beginnings of a macro pullback. But now I'm a little concerned that maybe the market might be topping out. We should have seen a little bit more follow through, a little bit more momentum. What I might look at doing is just putting a single on here. Not getting too excited in case there is a bigger pullback. All right, we do have, it looks like a macro pullback signal. It's going to print right here. There it is. All right, get up there. time is it? Oh, we're almost near the top of the hour. The market has been in a little bit of an uptrend since the open, so I'm a little bit leery about a retrace, and it looks like we may actually be getting one. If we don't get a rally here soon, I'm going to think about bringing my stops in really quick. Come on, get up there. Do we have a signal anywhere else? No, not yet. So I'm hoping to see at least a little bit of a test of the extreme before we get any kind of serious retracement here. Come on, get up there. Last chance. Here we go. Okay, and I'm going to get a little bit more aggressive on my stops. I figure if they fail here, then it's probably a good time to get out. Come on. They're trying. They're trying really hard. Come on, get up there. Get up there. It's just too late in the morning. See, well, they weren't big moves, but the moves with any follow-through came early. No, they're going to tag me here in a second. Pretty aimless market right now. All right, boys and girls, I think we're going to button things up for now. We'll see you tomorrow morning. Hopefully the markets will have a little bit more momentum to them. I'm going to try to nurse this trade, see if I can't get it at least back to a break-even situation, but I'm not keeping too much hope out for it at the moment. Come on, just give me a little bit of an uptick. All right, you guys, we'll catch you later then. Bye for now.